we're not selling home loans here. We're in the property game. Yeah. And this is not me angling for any type of business. I'm like, if you look at the top 100 brokers in Australia, you'd find like that's the company that you generally want to keep. And you look across the country, there's some absolute weapons of brokers probably in your neck of the woods. And so you'd be able to find them out, speak to the real estate agents. They'll know who the best in breed in the local area is. You want a coffee with them and you just want to strike up a bit that in the event that this opportunity arises, can I refer them to you? And again, we're saying this gently approach. It's going to find a way that as a new relationship, you build that kind of rapport with one another, a working style that's going to be beneficial as well. And I feel like if you can just take that long-term view, that it's not like an instant deal that just gets, landed on someone's desk and converts. This may take a few efforts, a few times, a few feedback loops where it just falls over because their current mortgage brokers jumped in to save the deal. Then just be patient and it'll pay off.
Hi everyone, welcome back to another episode of the podcast. Thank you so much for being here, and please bear with me today. I am still recovering from a flu. I thought I had avoided it this year, but it got me, and it got me good. So I'm a little bit nasally and I'm a little bit short of breath, but we will get there, and I have got an amazing topic that I think you are going to really enjoy. Today we're diving into a topic that impacts everyone in the property space: interest rates, mortgages, and refinancing education. And now these are more than just buzzwords. They're the backbone of smart investing and successful property management. And to help us unpack this critical topic, I'm thrilled to welcome Aaron Christie-David, founder of Atelier Wealth. Aaron is a highly respected mortgage broker and educator with a passion for empowering property investors and industry professionals alike. And today, he's been helping Australians achieve their financial goals through tailored lending strategies. And today, he's here to share his insights on how understanding the language of finance and investing can elevate your property management game. For property managers, developing expertise on topics like interest rates and refinancing isn't just about numbers. It's about building trust, authority, and long-lasting relationships with your investor clients. By speaking their language and showing that you understand their challenges, you're not just managing properties, you're becoming a true partner in their investment journey. In this episode, we'll explore how mastering these skills can set you apart from the competition and why being financially savvy is the ultimate point of difference in today's market. So grab your notebook, settle in, and get ready to level up your expertise with Aaron Christie-David. Aaron, welcome to the Property Management Podcast. Thank you so much for being here. Now, before we dive in, can you please share with our audience a little bit about yourself and what you do?
Sure. Thanks very much, Kylie. Appreciate it. Excited. So my name's Aaron Christie-David. I run a mortgage broking business called Atelier Wealth. So we're based in Sydney and we're down the coast, south of Sydney, about an hour and a bit south. A bit about myself. I'm dad to two young girls. I've got a 6-year-old and a 4-year-old. So, my house is full of Frozen and fairies and unicorns. So we're right in the thick of that phase, but it's good fun. I'd probably say this has been like one of the most enjoyable parts of every part of fatherhood's been great, but this is really fun where they're really interactive and we're having a really good blast with the kids. And I run my business with my wife, Bernadette, who as of recently has taken some time out of the business to step out and really focus on motherhood. So I think we're kind of finding a new rhythm in our team, in our personal life as well. And then kind of looking under the hood of our business, we've grown the team and business for the last 8.5 years. And that's been a real journey. Look at the property market and what that's done personally and professionally for ourselves and our clients as well. And we're the beneficiaries of, a really strong, buoyant property market. There's no doubt about that. But our team work exceptionally hard. It's something I'm really proud of that, I think there's no tickets on ourselves, but, to put ourselves in the top echelon of mortgage brokers and brokerages in the country, it's just a testament to the fact that, it's consistency, it's showing up, it's a bit of tenacity thrown in the mix there as well. And I think the icing on the cake is just having a bit of fun while you're doing it.
Absolutely. I couldn't agree more. And it is amazing when you've got kids how life changes. But, we are living in such a world now where we are able to, balance it and
Mm.
integrate work and home life a lot more. I think COVID taught us we can work from home. We don't need big offices anymore. And, that's great that you and your wife are able to tag team and, still build the life that you want for your family. And I'm sure there is challenges along the way as well, like we all have.
Oh,
But
no, we're an open book, and not only as a couple, but you run a business together. That's a different dynamic. Any husband and wife, any couple will tell you there's challenges, especially when you move into that parenthood phase. You put 13 rate rises in the mix. Yeah, we're mortgage brokers, but we're not immune to any type of challenge like that as well. We've bought a commercial site, we're doing properties, so for us, I think what we've had to do is zoom out and really come back to values, just to dwell on this point that you've raised there, Kylie, which is, what race are we running? Let's just focus on us. There's no comparisons. There's no competition between others, especially with the nature of the work that we do. We really want to see others do well, but they're looking to us to make sure that we're leveling up ourselves. So something like where, you invested time in a podcast like this, personal, professional development, gives you that off-field success that, converts to really good on-field success in your business as well.
And that's really important as well. I mean, it's not one without the other anymore. It's a real integration for both. So, but let's dive into your expertise now. I'm going to pick your brains about all things mortgages, refinancing, and interest rates. So I guess let's maybe start at the very beginning. What are the major things that property managers need to know about mortgaging, refinancing and interest rates when it comes to their investors? And maybe just start with mortgages and refinancing first. Give us an overview of that, and then we can dive into interest rates after that.
Yeah, so if we're looking through the lens of, say, a property manager working with their investor clients, I say the property managers are the most underrated person in the entire, I call it, the team that surrounds an investor. So usually the buyer's agents, the architect or the hero that's kind of guiding and navigating, an investor's using a buyer's agent. Someone like us, the loan strategist or the mortgage broker comes into the mix. You may have the accountant and financial planner all doing their parts. And then the property manager is probably the afterthought. Oh, yeah, we'll just kind of slot someone in there. And no one's really giving that any critical thinking is that I need an asset manager as opposed to a property manager. So I think the real value add is when a property manager can come to an investor going, hey, fill me in on your investing strategy. I don't think there'd be many property managers that would have that type of vernacular. And I think if you did, you'd be, again, top echelon of property managers where you're taking that strategic approach to someone's portfolio. Yeah. Largely because they may not be buying that same area again. If they're a good borderless investor, they're buying, all around the country in emerging markets. So I feel like that's a non-fishing for business question, which is, hey, tell me a little bit about what you're looking to do. And there's so many reasons behind that. Because if I've got an investor client that we can bump up the rent by $50 because they're coming off a lease in a month or two's time and we've got to refinance it's a little bit tight, or they're trying to pull out more equity, that $50 a week can kind of move the needle a little bit when it comes to borrowing capacities as well. Yeah, so this lease that's ending and we know it's well under market value, potentially we could use a rental appraisal letter that the bank will accept. So it's working hand in glove with the investor client, but also with their mortgage broker as well to go, what are your ambitions to keep buying, scaling? How long do you think you're going to hold the property for as well? Because that may determine how much work they sink into a renovation or a lick of paint or flooring as well. And if you can understand where the investor is trying to go in their journey, you become part of that dream team. And I really feel like if you can pitch yourself as part of the team, you're going to change the entire dynamic of that relationship.
Absolutely. I couldn't agree more. And something that I have introduced over the last couple of years with my own clients is that investor review. So I sit down, I send out a Zoom invite at the end of every year or end of financial year, depending on, what's happening in life, and invite them to book in to have this a review. And one of the questions that we dive into is their mortgages and when was the last time they refinanced, and I have a relationship with a mortgage broker that I can then, if they, haven't had anyone look at their refinancing in 10 years or whatever that time frame is, or they're paying really high interest, then I will go back to them and say, well, here's a connection with a mortgage broker. Have a conversation. It's worth a conversation to see what is out there and what can change. But that's really setting me up as an expert, building trust with them, which is what I think this whole umbrella of investor education and understanding really the investor journey can do for a property manager. You're not just managing the property, you're actually the investment manager. And I think that'll go a long way, I think, to property managers retaining clients a lot longer rather than just a transactional relationship.
Absolutely. And it's not every not every property management client is going to chomp at the bit for this type of conversation, right? They're having this conversation with someone else. But as long as you open the door for this type of dialogue and you can warm them up that you're in their corner, it's not just about collecting the rent, paying some bills, for example, and doing a periodic inspection. It can go further than that. So I feel like don't expect the instant response where everyone's like, oh, I'm so glad you mentioned that, and like download their entire game plan and their property strategy to you. But again, if you're taking that long-term view, you find a few conversations that land, practice it, becomes part of your vernacular. You know when to weave it into the right conversation at the right time as well. Again, you're just opening up that dialogue that in the event they start talking about, you might be able to say, look, they're going to sell this financial year or the next financial year. Have you spoken to your accountant about, land tax or CGT? And again, we're not giving advice here. We're just saying, have you thought about this as well? And I think what we're trying to do, just like what you're doing, property managers, we're always trying to put mortgage brokers in that driver's seat to be, the leaders in a conversation. What you're doing is exactly the same, where it's like, hey, get a seat at the table because this is where great conversations and this is where the enjoyable part of the gig really is.
Absolutely. So talk to me about refinancing then. When is that the right time to have that conversation with an investor? Is it like 5 years in, 10 years in? Is it interest rates are too high? And
anytime. Yeah.
So
I'll jump in and just say, look, anytime's a good time, because if you've had some markets that have really shot up in value, there's instant equity to go and pull out the equity to go and buy another investment property. So if you're prompting your investor clients to go, hey, look, when was the last time you got this property revalued, for example? Again, you talked about there's a Zoom call. There's a way to do like a CoreLogic property report that goes out going, hey, his estimated values, for example, his estimated rent. Should we be talking about a strategic review on your portfolio? Bang, opens up the conversation again. So we're finding like tactile ways to get in and have conversations that are meaningful rather than I'm just calling to touch base. That won't land. Yeah. So then to your point around when we're doing something around refinancing, it's, hey, let me know early, because if you need, the valuer to go in there, for example, or do you need a desktop valuation? Again, we're finding ways to come into the conversation with a meaningful option, which is it going to be a full val? Is it going to be a desktop valuation that you need, or a drive-by, and just preparing that if you've got tenants in there, that again, we're managing this and leading the conversation. So the refinancing part becomes pertinent if they need to get in there to do a valuation.
Beautiful. And what about interest rates then? What do we need to know about them? I know they're a nightmare, personally.
Yeah, they're a nightmare, but and it could be that going, hey, look, should we be having a conversation around cash flow? Because cash flow and rates are, yields are so highly correlated. So you're talking about, hey, do you need a certain dollar figure from a yield perspective to help you keep moving forward? Okay, how do we review the rent? What can you do on the property that would command, $50, $100 a week extra on rent, for example? We obviously want to do the right thing by tenants, but this is also through the lens of being, quasi business owner as an investor. Then it's going, hey, look, how are we being strategic? When can we start to do a review on your rent? Because so many investors that we see are under market on their rent. And it's like, oh, look, mate, I'd just keep it where it is. I know it's kind of under market. I'm like, yeah, it's costing you, tens of thousands of dollars in borrowing capacity. In fact, we can't even refinance because you're tight on borrowing capacity because you've got a sweetheart deal on your property, your investment property. So again, property managers should really be coming in going, hey, do you need to eke out any more rental income for future acquisitions? And again, we're just dropping little nuggets along the way that the more you're putting out and the more that investors are picking up, they're turning to you to have these conversations, and it just strengthens that bond for an investor and the property manager.
That is an interesting point you just raised about a lot of clients under market value with their
Yeah.
rent, because to me that's one of our major jobs as property managers, is to make sure we're the experts. Our investors might live interstate, overseas, they're not locally based. We are the ones that are guiding them with that rent. So it's actually a bit triggering for me to think that, there is such a large amount of investors out there who aren't actually achieving the rent for their properties. And I guess, in the grand scheme of things, that affects their cash flow, that affects their refinancing options. Is that right?
Absolutely. Yeah. Because you got to think the banks are taking off sometimes 20% on the rental income. So again, if you've got someone that's unfamiliar with what I'm talking about here, it's what you call rental shading. So the property's getting $500 a week rent, but the bank is only factoring, what's that, 20%, $400 a week rent. So they're losing $100 a week because of bank shading. And that can really hurt an investor, like they're under market rent, and then they're losing 20% to a bank's rental shading. Plus, they may be adding in rental expenses as well, depending on which bank you're going to. So they're double dipping there a little bit. And so what the client thinks they're getting at $500 a week gross, the bank's factoring 400, sometimes less as well. And that, again, we're talking about trying to maximize borrowing capacity. That could be leaving a lot of dollars on the table.
That is amazing when you put it into perspective like that. So,
Yeah.
yeah, that's incredible value. Thank you for that. That's
Yeah.
really great insight into, because we don't understand a lot of. I mean, I didn't know that either. So, that is really valuable to share with us. Now, a lot of investors have different strategies and reasons for buying investment properties, getting into the investment market. Can you share what some of those reasons are? And is it important for us as property managers or investment managers to understand what their bigger strategy is?
If you're ready to be a super organised, focused and productive property manager, buckle up, because Colmio is about to revolutionise the way that you work. Colmio is the driving force behind property management excellence in residential real estate. Now picture this, a comprehensive end-to-end system designed to be the beating heart of your property management tasks, manage your properties, owners and tenants, and handle payments, inspections, and even marketing listings without leaving the platform. Colmio is designed to be an all-in-one solution to all your property management needs. And here's the game changer. Colmio isn't just software. It's been awarded the most innovative PropTech Scale Up in 2023. Yes, you heard it right. Colmio has been recognised for their groundbreaking approach to property management software. How good is that? So property managers, whether you're a seasoned pro or just starting out, dive into the future of property management with Colmio. You can book in a demo with the team today and go in their weekly draw for a Prezi gift card worth $100. All you need to do is to head to the link colmio.com/thatpropertymum, and Colmio is KOLMEO.
Yeah, and I don't love quoting the ATO data, but it's probably the only source of information that we have around like the scalability of investors. So it's something like 80% of investors hold one property, or like 70% thereabouts, and then it's like 20% hold two or more. That number dwindles down to like 5% of investors have four properties, and then there's like a 1 or 2% percentage that owns 6+ properties. So there really is like this like massive drop off for people that can't get past 2 or 3 properties. There's so many reasons that sit underneath there, Kylie. And one is, they've had tenant issues and it really hurts their confidence. They've tenant damage, the properties cost a lot from a repairs and maintenance perspective. And it really just, I don't know, they lose faith in this as an asset class. That's probably one. So bad experience turns them off. The property hasn't grown in value and therefore there's not enough equity to pull out. That's another one. The third one is they probably just don't have ambitions to become a high, own 6+ properties because they're not, that way inclined, and that's cool, no judgments. But there is a cohort of investors that really want to keep scaling with ambition, particularly I'd say younger clients because rent investing is the only way they're getting into the property market. Like you look in Sydney, Melbourne, Brisbane, they're not buying their first property for circa 800. They're buying an investment property interstate, 500K underneath that. So for them to keep growing and scaling becomes super important because that's their only way of kind of being in the property market and being active. So they've got ambitions to keep growing and scaling. And I guess we see that from a mortgage perspective up front. And then, that the property managers removed. So again, if you I know your client and know their plans, if they're younger and you can, kind of get the energy from them that they're like, hey, mate, I'm keen, I'm really ambitious to keep going, match that energy and go, right, if you want to keep going, keep me in the loop. Let's find ways that we can periodically review your rent. It might be just a 1-year lease. We can bump up the rent after 1 year, for example. There's ways to do like strategic coat of paint, get this thing uplifted, get it revalued, because I know that similar properties are going for X in the area as well. So we know we can get instant equity to then go again. And you're just speaking the language of an investor, which is cash flow, releasing equity to go and buy again. And like I said, around that vernacular, if you can start to talk like an investor, you're speaking their language and automatically they're going, hey, mate, I've got the right partner on board as well.
That is great advice. Speaking like an investor. Love it. Now, there's a lot of synergy between property managers and mortgage brokers, I feel. And I think there's a real referral relationship and a lot of value in referral relationships. How would a property manager or property owner, or business development manager, go about developing a relationship with a mortgage broker? And I know not all mortgage brokers are the same. Yeah. So, talk us through what you would recommend if, so say they're doing their annual reviews and they want somebody to refer their clients who might need refinancing, who have got equity to pull out, and might want to buy another investment. What would you recommend?
Like any relationship, I think you want to start like courting each other, and it's getting to know each other's business. I think rather than going, how many referrals can I pump out or flick out, for example, that, you probably see them, you're pumping out a lot of referrals, but they're not landing, right? It just feels like the client's got this ick factor that you must be clipping the ticker. There must be like a referral arrangement that you're getting a small percentage. Like, I think clients have a good radar for that. So I think one part is crawl before you walk in these type of referral relationships. Get to know a good mortgage broker, make sure that they're fit for purpose. Because if we're talking this way around, hey, look, strip the equity, go again, you can use a desktop valuation, and you've got to understand the mortgage broker's process. That way, when you're talking to your property management client, you can refer with absolute confidence. And the spiel would be, hey, mate, look, we've literally done something very similar for another client, in the area where they went and saw their mortgage broker. The mortgage broker was able to pull out like $80,000 worth of available equity to help them go and buy another investment property. Is that something that you'd be interested in? And they're going, absolutely, I'd love that. Look, I'm going to tell you up front, we don't have any commercial relationship with this mortgage broker. We literally know that they've got the goods. So, I'll let you contact them. Here's their details, or I can do an email introduction, for example, and I'll facilitate this part. But at this point, I just want to let you know that, obviously you got to find a mortgage broker that's fit for your purpose. And generally as an investor, mortgage brokers are writing 3/4 of every home loan. So they're probably working with a mortgage broker if they're a good investor. Yeah. And so you might say that, I know you might already have an existing relationship, not upsetting that at all. If you need a second opinion, here's someone you can consider. Yeah. And again, you're framing that up that it's not like, hey, you have to do what I say, or I've got a mate that's over here. You're just literally pitching it as like low risk. I'm here to help. Here's someone who I think can help you on the journey as well. And it's often how you kind of can articulate this to a client that they feel there's no commission breadth in there as well.
Yeah. And what about property managers, though, wanted to reach out and have a relationship within their area? Yeah. What is, knock on the door and introduce yourself and...
Absolutely. Yeah, look, I think what you said there is mortgage brokers and property managers have this really good synergy. They've probably got another similarity, which is behind closed doors, a lot of work gets done. So they're not like the real estate guys where you're out there pounding the pavement for coffees. But that's why I'm like, if you can really start to see yourself as an asset manager and you're coming to the table with a good book of clients, you're sitting on a lot of value for a mortgage broker. And so you want a mortgage broker that's going to think the same way. Not like, I can find the lowest rate. We're not talking about interest rates are actually the most irrelevant part of this conversation. We're talking about trying to find ways to help investors grow a portfolio. And if the mortgage broker, again, isn't speaking this type of language, and I've got to say, with all due respect to my industry, there's not a lot that speak that way. Yeah. They're just there to pump product. They're just there to kind of sell a home loan. We're not selling home loans here. We're in the property game. Yeah. And this is not me angling for any type of business. I'm like, if you look at the top 100 brokers in Australia, you'd find like that's the company that you generally want to keep. And you look across the country, there's some absolute weapons of brokers probably in your neck of the woods. And so you'd be able to find them out, speak to the real estate agents. They'll know who the best in breed in the local area is. You want a coffee with them and you just want to strike up a bit that in the event that this opportunity arises, can I refer them to you? And again, we're saying this gently approach. It's going to find a way that as a new relationship, you build that kind of rapport with one another, a working style that's going to be beneficial as well. And I feel like if you can just take that long-term view, that it's not like an instant deal that just gets, landed on someone's desk and converts. This may take a few efforts, a few times, a few feedback loops where it just falls over because their current mortgage brokers jumped in to save the deal. Then just be patient and it'll pay off.
Absolutely. I totally agree. I think I went to a conference with some mortgage brokers earlier in this year, and I built some really great relationships there, and I've had some amazing conversations with different mortgage brokers and helped their clients, and they've helped my clients as well along the way. So it's been a very valuable connection. And even the connection with your podcast, I've had a lot of people reach out to me from that podcast. So from your podcast, Australian Property Investor Podcast, little plug there. Great podcast. Absolutely love it. And I think that's got some really great education for property and property managers who want to upskill and understand the property investment journey. Listening to podcasts like yourself are really valuable to help with that.
Thanks. And that's what it is. There's no shortage of resources when it comes to this. There's your information, there's our information, there's heaps of other property podcasts. The space is actually a little bit cluttered. But that's what I'm saying. Like, there's so much information you can sink your teeth into. I'd say particularly if you're a hungry property manager, super hungry to grow, you can be talking to clients around, hey, look, did you buy this property in a trust, for example? Did you buy this in an individual name, self-managed super fund? You probably will have a little bit of that information when you go to sign on the lease and go, take me through, how did you buy this property? Yeah. And again, just by asking those questions, I've got to tell you, like, we've got a few properties. With all due respect, I'm not sure they've even asked those questions. They took the lease on, hunky-dory, here's a few photos, thanks very much. And I'm like, I'll give you one example. We're doing a commercial lease at the moment, and I am putting our property manager through their paces. I'm like, show me the marketing plan, show me what you think you're going to get, how you're going to leverage this, what videos, what assets are we building that we're going to get the best interest and we're going to get the best tenant in there.
Absolutely. Love it.
And that took initiative on my part. So I'm feeling like I haven't got that level of expectation on them because, like us as mortgage brokers, we're all busy. Property managers are busy, putting out a lot of fires. And that's generally the nature of our businesses, which is we're only really involved when things are either going off the rails or there's issues to be resolved. So when you spend your day on defensive mode, it's very hard to think offensive mode. And if you want to find a way to be proactive, then you need to block out time in your diary to have these conversations with people with really good, you can probably see the really good investors that are like, they're thinking abundance. They're thinking, how do I be a good landlord, but how do I be a good investor? And if you can, again, we're saying if you can bring this conversation up, they're just going, hey, mate, you speak and sound different.
Absolutely. And that's, again, is going to be building that trust, setting yourself up as that expert and brilliant point of difference. And I think that, that's a great way to have long-term clients who aren't, especially if your competitors aren't doing anything near what you're doing or don't have the depth of knowledge that you've got. Yeah, it's a great strategy. One of the things I do on this podcast, it's a bit of a tradition. Don't worry, it's nothing too crazy, but I do like our guests to share some personal development. So do you have a tool, book, podcast, resource that you can share with our audience to help them on their journey?
Heaps. I think that's where the game's won and lost. It's personal development. So for me, I will always plug into whether it's Jim Rohn on YouTube, whether it's, I do like the Diary of a CEO podcast, probably second to your podcast, perhaps there. I
I love Diary of a CEO. That's one of my favorites.
Isn't it just so, it's so listenable? I feel like you just ask the right questions. They get awesome guests on there and you get a real diverse kind of breadth and the depth of life and people and characters. I'm big on training, health perspective. It doesn't mean you have to be a gym nut. I think if you can really, the way I look at health and it's life in general, it's a level playing field. You got to show up, you got to do the work, and that's how you get results. And if you can find ways that you enjoy staying fit and healthy, I feel like that shows up in your on-field success, which is, in business or in the vocation that you have. So to me, I will always go to like training as one anchor to go, if you can get that locked and dialed in, then you're sleeping better, then you're eating better, you feel good about yourself. There's a certain element of self-confidence when you do feel good about yourself, not from a vanity perspective, but purely from a health perspective and longevity. Then mentally you become a lot fitter, stronger. You'll do things like an ice bath or a sauna or wellness. There's so many beautiful bathhouses you can go to treat yourself. And that's probably one thing that we love doing, myself and Bernadette. We'll work hard, get a massage, go to a bathhouse, and it's like that's a great bonding experience for us, no kids. And I feel like that's one little treat in life that I don't think is too opulent. But
no, that's great. Yeah, that comes under that self-care umbrella as well. When you're working hard, you've got to have something to switch off from the work. As business owners, it can be really hard. You're always on. You're always thinking of new ideas. What's next? Which client have I got to, what have I forgot?
Yeah.
Who do I need to help next? Yeah.
I think you mentioned about the similarity between property managers and mortgage brokers. Like the bank pays us, but I work for a client, like a borrower. The property manager is paid by the investor, but they're taking care of the tenant. Like there's so much similarities there that you've got that your client's actually not your paying client sometimes as well. And you're managing a lot of these relationships and you're giving a lot to these relationships. So you're actually expelling a lot of energy. And so who's filling your cup? There's probably why there's a lot of turnover in property management and in mortgage broking, because you're constantly just giving the entire day. Is like people only call you when they want something from you. So who's in your corner that's actually lifting you up, filling your cup, that's, taking care and checking in on you? Like there's so much that I just go, no wonder our industries have so much in the way of turnover and burnout, because sustained success, unless you're wired like X factor energy, you can't have a long, successful career without being the exception to the rule sometimes as well.
No, I think that's brilliant advice, and sometimes we're the last ones to take our own advice, though. But sounds like I'm just recovering from a flu, so I got to a bit of a burnout point a couple of weeks ago. But our bodies let us know that it's time to do some self-care. So how can our audience connect further with you? What's the best place to reach out to you?
Yeah, look, I'm probably most active on, say, LinkedIn, for example. Again, if you want to check out the podcast, the Australian Property Investment Podcast, probably the best way to find us. YouTube is probably one of the other great platforms for us where people can go on and watch the podcast. If you've got someone that's, again, no plugs here, but I'm happy to give copies. So for anyone that's listening that wants a copy, jump on the website and send us there's usually a link on our contact us page to get a free copy of the book. To me, this is really trying to help more Australians get into the property market. The Happy Home Loan Handbook, which is published this year. To me, that's kind of my gift to a lot of first home buyers, because I do work with investors. So this is a lot of condensed conversations that have worked with a lot of first home buyers. So if you've got younger clients or you're hearing people that are trying to get into the property market that think that's tough, this is the handbook that kind of will help them get in.
Amazing. Yeah. Thank you so much, Aaron. You're a wealth of knowledge, a great human, and I've really enjoyed having another conversation with you.
You too, Kylie. Thank you very much. Appreciate it.
I'm super excited to share today's podcast sponsor, HD&U, with you. Having met Stuart Hayes and worked with him on the show, I know firsthand how passionate he is about transforming workplace dynamics for real estate teams. With decades of expertise, HD&U creates unparalleled team experiences that elevate both well-being and performance. They make leadership simpler, smarter, and more effective by focusing on the needs of people and the goals of the business. HD&U doesn't just develop leaders, they build empowered, cohesive teams that truly understand how to work together for maximum impact. Whether it's streamlining processes, boosting morale, or unlocking new levels of productivity, HD&U equips real estate leaders with the tools to lead with confidence and clarity. Hallelujah, that sounds amazing to me. Experience the future of team success with HD&U, where better work really does begin. And here's something special for That Property Mum listeners. HD&U is offering an exclusive team and culture-focused survey, complete with an analysis and a one-on-one debrief with Director Stuart Hayes, all for an incredible price of just $750. Head to the show notes to find out more. Can I ask you a quick favour before you leave this episode? Now, we all know how important reviews are for businesses these days, and mine is no different. If you could spare just a minute to follow, rate and review this podcast, it would mean a lot to me. In fact, what would get me super excited is if you share this podcast with someone in the industry who you think might need to hear some of the episodes right now. And if you'd like to find out more about working with me or any of the products I have to help you start, grow or scale your property management business, head to my website, thatpropertymum.com.au, or check out the links in the show notes.